Hello and welcome. Good morning. You're tuning into Market Cafe. I'm Ankita Saxena and with me, Shristi Sharma. In the next 1 hour, we'll take you through all the global cues and how the global markets fared, and of course the cues you need to watch out for on Friday morning before the start of D Street. Let's take stock of how the Wall Street fared yesterday. Now Dow Jones, S&P and Nasdaq, all of them, they all slipped, after the recent rally that we saw. So some cooling off is what we saw coming in. As far as Dow Jones is concerned, that was down 267 odd points. S&P 500 was lower by 0.3%, and Nasdaq was also down 0.3%. Now remember, Walmart's outlook has dampened sentiment despite an earning beat, so that is something that investors were watching out for. We also had the US jobless claims that stood at 206,000 in February. That's the estimate for the 14th week ended, and also jobless claim for 4-week average was 219,000. Also, we do have a bit of a macro data that the investors are waiting out for. A possible economic data and the possible court ruling as far as the tariffs were concerned. Now remember, this has been sub judice. The entire matter of Trump's tariff has been sub judice, and investors are really waiting out for the court ruling on that. And if you look at the stock futures right now, they are also a little changed. In fact, Dow Jones has added just 7 odd points. S&P 500 futures has gained a 0.09%, and Nasdaq is also up 0.1%. So very flat moves that's coming in as far as the futures are also concerned.
All right, but along with that, very interesting moves when it comes to the commodity world, and especially the move in the oil, because the energy markets and especially the oil is seen to be heading for a 6-month high for itself. Crude is hovering around that $71.50 per barrel mark when it comes to Brent oil, and even more than a 2% gain overnight, what we have seen in the WTI crude as well. And the reasons are well known with respect to the US and Iran tensions, and definitely along with that, what we are getting to see is how the developments pan out with respect to the Strait of Hormuz is something that the traders are closely watching out for, and that is indeed perking up the crude prices higher. And the US natural gas prices, they even hold near the 4-month low for themselves. But along with that, the safe haven buying is once again seen to be coming back, with the traders preferring gold as well as silver right now. As we speak, gold is up almost 0.7%. It's trading above that $5,000 per ounce mark, close to $5,040 per ounce mark. When it comes to the silver prices as well, today morning, more than a % gain is what we are getting to see on silver, close to that $78 per ounce mark. So yes, oil as well as the whole energy basket, the precious metal basket, that is seen to be having very good moves.
All right, so it's the commodities that's seeing all the action. In fact, oil that's remained elevated since yesterday, that touched $70 a barrel on the back of renewed fears of a fresh attack on Iran. And US President Donald Trump has also addressed the first session of his newly formed Board of Peace in Washington. This summit is being attended by Israel, Saudi Arabia, Egypt, Qatar, Bahrain, Jordan, Kuwait, Morocco, Turkey, and the United Arab Emirates and Pakistan. In his inaugural address, Trump said that some nations are trying to act cute with Board of Peace. He also spoke about the talks with Iran, and in a significant statement, he said that we will know about the peace in West Asia in the next 10 days. Listen into what Trump had to say.
Nuclear potential. And when it decimated that, all of a sudden we had peace in the Middle East, because there was a black cloud hanging over the Middle East. And if that wasn't done, that cloud would have been there. And countries like Saudi Arabia, countries like Qatar, countries like, nobody could have signed. You would have had that threat. Nobody could have had, you couldn't have had peace in the Middle East. So now we may have to take it a step further, or we may not. Maybe we're going to make a deal. Well, you're going to be finding out over the next probably 10 days.
All right, moving on. And Trump also spoke about Iran and said that Iran cannot have nuclear weapons. Meanwhile, situation between US and Iran continue to remain tense, with White House warning Iran to accept the terms and make a deal with the US. Listen into that as well.
I've always heard peace in the Middle East is impossible, and it's turned out not to be. And we do have some work to do with Iran. They can't have a nuclear weapon. It's very simple. You can't have peace in the Middle East if they have a nuclear weapon. And they can't have a nuclear weapon. And they've been told that very strongly. Since the hard-won ceasefire of last October, the United States and our partners have facilitated the delivery of vast amounts of humanitarian aid, numbers that nobody's ever seen before. In November, the United Nations Security Council unanimously approved the Board of Peace. And last month in Davos, we welcomed over 24 members to this very important new organization.
And well, let's talk about some macro data that's been trickling in as far as US is concerned. Fresh US data shows that the labor market remains on steady ground as weekly jobless claims fell more than expected. New claims for unemployment benefits dropped to 206,000 in the week ending February 14th, well below the market expectations. The 4-week average also moved lower, pointing to fewer layoffs overall after a brief rise at the end of January. The latest figures align with the comments from the policymakers in minutes of the Federal Reserve's January policy meeting, which noted that most participants see labor market conditions as stabilizing. Meanwhile, the trade data shows that the U.S. trade deficit narrowed slightly in 2025 to $901 billion, while the goods trade gap with China fell sharply year-on-year to just over $202 billion. So that's the macro data that's coming in.
And the U.S. trade deficit remained stubbornly high in 2025 despite aggressive tariffs. Now, data from the Department of Commerce shows the gap at $901 billion, barely down from the last year. Now, this comes after tariff moves by Trump aimed at narrowing the imbalance, and imports surged as firms rushed ahead of the duties, while exports also rose. Thus, the trade gaps with Europe, China and Mexico remains wide.
And well, speaking of macro data, Japan's inflation has slipped below the target for the first time in nearly 3 years. Headline CPI fell to 1.5% in January, ending a 45-month run above the Bank of Japan's 2% goal. Core inflation eased to 2%, while core slowed to 2.6%, driven by falling food and fuel prices. Government tax relief and stabilizing costs are cooling pressures. The data shows 0.1% GDP growth, helping Japan narrowly avoid a recession.
And Prince Andrew has been released after spending 11 hours in police custody over alleged links to Jeffrey Epstein. Now, police questioned him on the suspicion of misconduct in public office linked to claims he shared confidential documents. Now, Thames Valley police say that a formal investigation is now underway. King Charles III says that the law must take its course. Prime Minister Keir Starmer says Andrew must also cooperate with US authorities.
And well, with that, it's time for us to slip into a short break. Don't go anywhere, we'll be right back. Cafe, where we are taking you through all that you need to watch out for before the start of Indian markets. And let's take stock of how the Asian markets have opened up. Well, we do see Asian markets that are trading in the red. Now, remember, Chinese markets are shut on the back of that Lunar New Year holiday. Hang Seng, Shanghai, both are shut. In fact, it has been a truncated week for the Asian markets. But as far as the Japanese market is concerned, that is Nikkei is trading down with cuts of 1%. Now, remember, we had the inflation data that came out, and we saw a dip in the headline inflation that dipped below a Bank of Japan's 2% target for the first time in 45 months. But the markets have not really, reacted to that, because the Nikkei is still down 1% in the trading session. It's following suit, taking cues from the Wall Street. Even as far as the other indexes are concerned, whether it's Kospi, however, is managing to hold on to some bit of gain. 72 points uptick is what Kospi is saying, and S&P ASX 200 is also trading in the red, though very, very flat moves coming in, but it is trading in the red. So very mixed cues coming in, but GIFT Nifty is signaling a negative start. Again, a very muted negative start is what GIFT Nifty is also signaling for the Indian markets.
All right, that's about the Asian handover, but just yesterday, markets saw a sharp sell-off with Nifty 50 snapping its 3-session winning streak, ending lower with over 1.2% of decline, wherein BSE-listed companies saw their market capitalization erode by nearly 7 lakh crores in a single trading session. Markets saw the worst intraday fall since the budget, and the pressure was most visible in the banking space, with Nifty Bank sliding more than 1.3%. The broader markets fared even worse. Mid-cap and small-cap indices both declined over 1.5% as the risk-off sentiment dominated the trade. But adding to the nervousness, India VIX actually surged sharply by over 10% of the gains, reflecting heightened volatility and investor caution. Now, sectorally, it was a clean sweep of losses, with all major sectoral indices ending the trading session in negative territory. Let me take it across to my colleague Snehi, who joins with more details.
Well, yes, all in all, a very weak day of trade coming in for the market. In fact, the first 3 days of the trading week were pretty good, but all of those gains were wiped out given the way the markets panned out on Thursday. About a 1.5% cut coming in on the Nifty, the biggest single intraday fall coming in since budget day for our markets. Sensex too lower by about 1.5%, and in fact, if we're talking about levels, the Nifty ended around the 25,450 mark, so massive fall of about 365 points coming in on a spot basis, on an intraday basis for the Nifty. You have the India VIX that spiked up 10.25%, very sharp jump over there, and around the 13.5%, 13.5 mark on India VIX, pardon me. For Nifty Bank 2, it was an elevated day of fall, 1.25% cut coming in on the Nifty Bank 2. Out of the Nifty 50 group of stocks, there were barely 3 or 4 stocks that have closed in the green, namely ONGC, Hindalco, HDFC Life, and very nominally Dr. Reddy's. On the flip side, 46 stocks have closed in the red, led by Interglobe, Trent, M&M, Ultratech, BEL. The cuts on the Nifty 50 were led by all of these cuts, anywhere between 3 and 4% each. Moving away from that, the broader end of the market also was of no help at all in terms of support to the benchmarks. A 1.6% cut on the mid-cap index and a 1.25% cut on the small-cap space further put pressure on the breadth of the market. Sectorally, all sectors closed in the red. Nifty Realty saw the biggest beating, 2.5% lower. Similar cuts on Nifty Media, Auto. You had Nifty FMCG that was lower by 1.8%, followed by Nifty Defence, Finance, Bank. PSU Bank was lower by Nifty 1.25%. The least losing sector was also Nifty Pharma, that saw a cut of 0.5%. So that is the kind of extent of weakness that we've seen in the market. From the broader end of the market, if you talk about the Nifty 500 stocks, 439 stocks closed in the red, with only 61 closing in the green. So that's a very massive skew towards the declines for the day. You had names like Lloyd Metal, Hexaware, HPCL, Jindal Saw, Keynes, Paytm, Persistent. All of these names have seen massive cuts between 5 and 8% respectively, and big cuts coming in all these names from the broader end of the market. On the flip side, Newgen continued its rally, another 14% uptick. Tata Investment, Oil India, Godrej Industries, Netweb, ONGC, RK Forgings, Birlasoft, all of these were in focus. Of course, you had some names like Interglobe that lagged on the back of the spike in crude prices that we saw on everything that's happening geopolitically between US and Iran. But on the other side, you had names like ONGC that also did well, but some paint stocks, you had tire stocks, some crude ancillaries that were under pressure.
All right, that's how the market shaped up yesterday. But let's also talk about the events that you need to watch out for today before the trading session starts. And for that, Snehi is joining us yet again.
Well, yes, lots of cues to watch out for back home as well as globally. Back home on the macro front, watch out for the HSBC manufacturing PMI number that we're expecting. And since it's Friday, weekly forex reserves numbers will also be out. Globally, a lot of macro indicators to watch out for. First, starting from the US, the personal income number, the PCE price index, remember, which is the Fed's preferred gauge of inflation, is going to come out. On the basis of this number, the Fed's policy action down the road is going to be decided. So watch out for this number. Along with this, from the US, we have GDP numbers coming in, and the global S&P global manufacturing data will be out as well. From the UK, watch out for retail sales, S&P global manufacturing PMI. From Eurozone, also watch out for the HCOB manufacturing PMI. And from Japan, CPI numbers will be on our radar, their inflation print, along with the manufacturing PMI numbers as well. And of course, the Chinese markets continue to stay close for the course of the week on the back of the Lunar New Year holidays. Shifting focus back home, talking about corporate action and board meetings to watch out for. Keep a close eye on JSW Infra. The board is going to meet to mull fundraising, so watch out for that. And some names like Info Edge, Senco Gold, IRCTC, Alchem Labs, First Source Solutions, PFC, PTC India, RCF, all of these names are going to be trading ex-dividend, so keep a close eye on them as well. Some action expected in the primary end of the market too. It's Gaudium IVF and Women Health Limited. That IPO is going to be opening for subscription, so keep a close eye there. And lastly, in terms of some other events that we are tracking globally, the Atlanta Fed President Raphael Bostic is expected to speak at an event, so watch out for any comment and any cues or any indication on where the economy is headed. And lastly, the United States Supreme Court may potentially rule on Trump's tariffs. This is just something that we are picking up from reports. So we'll keep a close eye on all of these cues.
right, thank you so much, Snehi, for that. But time now to slip into a very short break. We'll be right back. And robotics powerhouse. He also highlighted how physical AI-driven robotics is already scaling across the industries. Listen into that.
India should take a moment and just celebrate how successful this event has been. It's been 250,000 people, probably the largest AI event that's ever been done in the world. So a lot to be proud of. When you think about open source versus closed source, I actually think there's a place for both. For both. And having an open source model so that you can get diffusion to be broadly applied is a very important dimension. And then there's going to be certain areas where these models are pretty expensive to train, and you might need to go out and monetize them effectively as well. So I think the best combination comes when you have the right level of combination of open source and closed source. And what the Prime Minister said today, I loved his line of, are you buy or what was the second thing, the opportunity side of it that he talked about? Like, do you approach this with fear, or do you approach this with optimism and opportunity? And I feel like that notion of approaching AI with optimism while still being very clear of the downside effects that could be had is very important. And I think that's exactly what India is doing. You're very concerned about cybersecurity. You're very concerned about what's happening from from misuse of this technology, but you're actually making sure that you're building this at population scale for the betterment of humanity, which I think is the way that we should approach it.
Right, and that has also been the view of several other leaders who have actually spoken, and we've heard them speak as well.
Yeah.
But Mr. Patel, let me also ask you, you've spoken on multiple platforms that, the AI revolution started with the usage of chatbots, and then we moved on to agentic AI.
Yeah.
But what will define the next wave, or what the next trend as far as AI is concerned, and how is Cisco bracing for that?
So firstly, let's understand the big difference between chatbots and agentic. Chatbots was where AI was thought of as a tool for productivity. Agents is where this is now an augmented teammate that's a digital coworker that's going to work with us. And we're actually adding workers to society that are going to help each one of us. So each one of us is going to be a supervisor of agents. And I think that's going to have a profound implication on the kinds of problems we can solve, the kind of capacity we can add, and so there's a huge amount of upside.
And while speaking at the India AI Impact Summit, French President Emmanuel Macron stressed on special defense partnerships between India and France and reiterated how Rafales are key to the relations. Let's listen in.
We don't have just a strategic partnership. We have a special global strategic partnership, which is unique,
yes,
both for India and France.
Yes.
On Rafale, what we want to do is to expand. So India confirmed few days ago its willingness to indeed command a new bunch of Rafale, 114, and to co-produce. So the Make in India will be core in this new command. And on top of that, what we want to do is to improve the cooperation in maintenance capacities, in terms of diversification of approach, and to be much more, I would say, in a sort of mutual agreement cooperation. So it's a new step forward, clearly consolidating the existing one and going further. So Rafale is absolutely key. I hope we'll do the same on submarines. We offered additional capacities. And we are doing it as well on the engines and on helicopters, by the way, between Tata and Airbus. So clearly the cooperation is improving, and we are building a new area of cooperation.
And next up is definitely the next conversation we actually had with the management of Cisco, and actually the president of Cisco, Mr. Jeetu Patel, highlighted the best approach to AI combines both open source and closed source solutions and urged the optimism while being mindful of potential downsides, especially cybersecurity concerns. Listen in.
India should take a moment and just celebrate how successful this event has been. It's been 250,000 people, probably the largest AI event that's ever been done in the world. So a lot to be proud of. When you think about open source versus closed source, I actually think there's a place for both. For both. And having an open source model so that you can get diffusion to be broadly applied is a very important dimension. And then there's going to be certain areas where these models are pretty expensive to train, and you might need to go out and monetize them effectively as well. So I think the best combination comes when you have the right level of combination of open source and closed source. And what the Prime Minister said today, I loved his line of, buy or what was the second thing, the opportunity side of it that he talked about? Like, do you approach this with fear, or do you approach this with optimism and opportunity? And I feel like that notion of approaching AI with optimism while still being very clear of the downside effects that could be had is very important. And I think that's exactly what India is doing. You're very concerned about cybersecurity. You're very concerned about what's happening.
Let's move on then. Swiggy has brought down the curtains on its standalone 15 minutes food delivery app Snack just after it completed a year of operations. Well, internal mail cites challenges with broader economics. Anjali is joining us with more details on this.
That's right. Swiggy has shuttered its standalone quick 15-minute food delivery app by the name of Snack, which became operational in January last year and close to a year of operation, and they're winding down the operations. Now, in an internal email, Swiggy said that this is due to the economics not making sense, especially at scale, and that is why they're winding it down. The company said that while there was a product market fit, there were challenges with the broader economies of this offering, especially at scale. And now that they're going to focus on innovations that are going to have a long-term potential. Now, Snack was launched initially in Bangalore in January 2025 and later was scaled to Gurgaon. But this was also in select pin codes of the city and not really a full-fledged launch in those cities as well. But now Swiggy is winding down the Snack business. While Snack offered the quick, ready-to-eat meals as well as beverages, Swiggy is continuing with its bold offerings within the Swiggy app, but Snack was a standalone app that it is now shutting down. We've seen in the recent past that Zepto, which ran a similar offering under Zepto Cafe, had also shuttered a big chunk of their cafes due to profitability concerns as well. And that is what we've seen with Zomato as well, shutting down the quick offering shortly after that was started. So overall, we're seeing some sort of profitability concern, some sort of scalability concern coming in for the 10 to 15 minute food delivery apps, and Swiggy Snack is the latest name that is added to the graveyard of the many apps that have tried this before.
Thank you so much for that. But meanwhile, KKR balance sheet CIO Henry McVie recently concluded his trip to India and has shared his outlook on India's challenges and opportunities going forward, wherein McVie has listed roads and renewables as the key focus area in India's growth story. He also highlighted the impact of AI on Indian tech sector. We have Anurag Joshi joining in with the key takeaways of his latest report.
Roads, renewables and logistics are among the key areas of focus for KKR and Company in India. According to Henry McVie, the CIO for balance sheet at the private equity firm, following his recent India visit, McVie notes that the sentiment across Mumbai and New Delhi is decidedly more muted than on his prior visits to the country, and investors and business leaders weigh near-term uncertainty. The long-term backdrop continues to improve under the Narendra Modi government's reform agenda, and the dominant issue is focused in India today on AI and on the implication of AI for India's outsourcing outsourcing business. The pivot towards the leaner workforce is likely to signal a faster shift to an automated and AI-enabled delivery models than many investors, and including global investors, had anticipated. The consumption upgrade story remains alive and well in India, though local equities have lagged in the recent times. That may change in the second half of 2026, McVay says in the note. EPS for the country could grow in the mid-teens in 2026. The currency risk appears more manageable than it did earlier. And KKR notes that it expects less rupee depreciation versus the US dollar than had happened in the past.
All right, moving on then, let's go across to my colleague Ravinder, who's standing by with all the stocks you need to watch out for before the start of the street. Ravinder, take us through all the stocks.
Federal Bank can be in focus where bank has received a income tax refund order totaling rupees 686 crore for the assessment year 2011-12, 12-13 and 13-14. So back of this, Federal Bank can be in focus. Keep an eye on Texmaco Rail and RVNL, where company has signed a joint venture agreement to manufacture next generation rolling stocks and execute global rail EPC project with Texmaco holding a 49% stake in this joint venture. On the back of order win, Railtel Corporation of India can be in focus, where company has bagged approximately 36 crore railway signaling order from the North Central Railway. So back of this order win, Railtel Corporation of India can be in focus. Keep an eye on Pace Digitech, where company has received an advance LOA worth of rupees 87 crore from the Railtel for the supply and maintenance of IP-based video surveillance system in the LHB coaches. So back of this, Pace Digitech can be in focus. From the pharma space, keep an eye on Zydus Lifesciences, where US FDA has conducted pre-approval inspection for the injectable medicine device, and inspection was conducted from February 16 to 19, 2026 in Ahmedabad facility of the Zydus Life, and the inspection closed with a nil observation. Apollo Pipes can be in focus, where S. Gupta Holding, which is a promoter group member, purchased 5.25 lakh equity shares in the open market for approximately 77 crore between February 13 to February 17. And lastly, keep an eye on Novartis India, where promoter Novartis AG has entered into an agreement for the sale of approximately 71% stake in its Indian subsidiary, and Novartis India to Waverise Investment, Crease Capital Fund X, and to Infinity Partners as a part of this deal. This acquires has to agree purchase 1.74 shares of Novartis India from the Novartis AG.
That list, but that's not it. Let me take it across to my colleague Mitali, who is standing by with more list of stocks to be watched out today. Good morning, Mitali.
Hi, good morning. So for the stocks in focus today, let's talk about ABB India. Company has released their quarterly results, and the company has published the revenue that has increased for 6% in this quarter, supported by strong demand across the data centers, the automotive segment, railways and metals, and growth was broad-based across the business segments. Also on the profit after tax, there we saw a decline of around 18% for this quarter. It was weighed down by material cost inflation and also higher labor expenses as quoted by the management. Now the standout number, the order intake hit a 5-year high of 4,096 crores order intake that they have published for this quarter, that is up 52%, and the order backlog, which stands at the quarter end, is at 14,115 crores, that providing solid revenue visibility heading into 2026. Also, CIE Automotive have published their quarterly results and posted steady consolidated numbers for this quarter. Revenue grew around 14%, while on the profitability front we saw an increase of 10.3%. The margins, they remained largely stable, with EBITDA margins at 14% versus 14.2% last year, reflecting operational discipline despite the cost pressures. Also, Ola Electric will be in focus today. As per the Economic Times reports, the company is focusing on planning to reduce its store networks to 550 outlets. In its latest quarterly update, the company said it has already pared down its network to 700 outlets as part of what it calls a structural reset. Also, Vari Energies is going to be in focus today. Keep that stock on your radar, as the company is in discussions with Andhra Pradesh government to set up a 20 gigawatt battery gigafactory. The proposed 8,175 crores of investment marks a significant expansion into energy storage and could strengthen its long-term positioning in the renewable energy value chain. Lastly, keep your eyes on Swiggy, as well as the company has shut down its 15 minutes delivery app, the services for snack, citing profitability pressures. The development highlights ongoing challenges in the ultra-fast delivery segment, where scale and sustainable margins remain difficult to balance. Back to you.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. Roundup.
Definitely. So there's so much going on in the IT industry, from partnerships to AI shocks, but let's cover the Q3 earnings of our industry this time. Firstly, most large cap companies were in line operationally, as you can see. So right here, HCL Tech among large caps was the only clear beat. Now, revenue growth was modest across the board, and PAT, however, declined quarter on quarter for TCS, Infosys, Wipro, as well as Tech Mahindra. Now, this was largely due to labor code impacts, but excluding the impact of these labor codes, these performance of IT companies were largely in line with the market estimates. Now, talking about the labor code impacts, TCS and Infosys faced the largest impacts. TCS had impacted profitability of 2,000 crores, more than that actually, as well as Infosys, which was whose profitability was impacted by over 1,300 crores in Q3. Now, talking about the margins, let's talk about HCL Tech. Margin expansion of 140 basis points. Tech Mahindra also 100 basis points. Wipro also 140 points. Now, TCS and Infosys margins remained flat this quarter. Now, important thing to note here is that guidance was raised by many large cap IT companies, which includes Infosys, Wipro, as well as HCL Tech in Q3. And amongst other trends, we could see strong deal momentum continuing and robust TCV, total contract value, across these companies. Now, talking about mid-cap companies, let's talk about our tier 2 IT. Mid-caps delivered a better growth and outperformed large caps on a quarter-on-quarter basis, and Persistent Systems especially had a beat quarter. And Coforge, its order book was up 30% year-on-year, quite significant, might I add, with 6 large deal wins assigned. Now, talking about the key themes this quarter, key trends across the industry. Bottom line, of course, impacted due to labor code impact, one-offs. Tier 2 companies outperformed tier 1 companies, and high-tech vertical especially remained quite under pressure in Q3. And talking about cloud, especially a very significant theme going ahead and currently as well, cloud, software and AI remained key growth drivers and are expected to remain so going ahead. Now, AI monetization, something very special has been happening. IT companies have started disclosing their AI revenues. TCS disclosed $1.8 billion of AI revenues in annualized basis. HCL Tech disclosed $146 million in Q3, and Infosys on their AI day disclosed 5.5% of their total revenues coming in Q3 from AI. Back to you.
All right, Ishika, thank you so much for joining us with the details. But let's talk about the merger of PFC and REC. The Power Ministry has constituted a high-level committee to monitor the progress on the merger of PFC and REC. My colleague Mithali is joining us with the details.
Coming in for the proposed merger of REC and PFC, the government has now set up a high-level committee along with a dedicated working group to fast-track and oversee the merger process between the two public sector NBFCs. According to the sources familiar with the matter, this working group is going to study the detailed modalities of the merger and also submit its recommendations. Meanwhile, the high-level committee, it will monitor the overall progress and implementation. Now, the working group, it will be including the executive directors from both the companies, PFC and REC, along with the Director for Distribution in the Power Ministry. This move, it follows after the government's announcement in the February 1 Union Budget, where it outlined plans to achieve scale and improve efficiency in the public sector NBFCs. As a first step, the government proposed restructuring PFC and REC. Subsequently, the board of both the companies, they approved the merger plan. Importantly, it has also been clarified that the merged entity, it will continue to remain a government entity, putting to rest concerns around the ownership and control. Back to you.
All right, Mitali Angan there. Bullion markets are also seeing sharp surge in activity as gold and silver prices continue their strong uptrend into the new year. Mitali, take us through all the analysis of the charts.
Right, so talking about MCX, it's riding a full-blown bullion boom this year, and this time it's not crude, not gas, but the talks of the town, gold and silver commanding the trading floor. We saw that the gold prices, they have witnessed a sharp 75% of surge from the period of January 2025 to January 2026. But silver, it has completely outshone gold and surged 167% in the same period. And that price volatility, it has actually transferred into derivatives activity on MCX that we have seen. In January 2026, the data on MCX, it shows that the gold options turnover surged around 1149% on a yearly basis to 40,025 crore rupees. Also, the silver options, they did even better, soaring 2,109% on a yearly basis to 44,848 crores from the earlier 2,030 crores in 2025 January. Talking about their futures segment, the gold futures turnover, we saw a rise of 571% in the futures average daily notional turnover on an yearly basis, at 571% of increase in January 2026. But the silver futures, they climbed even higher, reporting 611% of surge in their volumes. Month on month, if you see, the growth on futures is equally telling. The futures average daily turnover, that volume for gold, it has moved up 68%, while for silver it is up by 25%. And since late 2024, the exchange, that is MCX, it has reworked its gold and silver options contract, shifting from the bi-monthly expiries earlier to now the monthly expiries. That significant move, it for sure improved the liquidity and participation. But the persistent global tensions, rate cut speculation and the currency volatility have revived the safe haven demand that we see and in both gold and silver. That has been resulting in the dominating MCX volumes, which have obviously overtaken the energy contracts that used to dominate earlier. Back to you.
All right, Mitali, thank you so much for joining us with that roundup. But it was a mixed quarter for the pharma sector, with Sun Pharma, Dr. Reddy's, Lupin, Zydus beating the expectations, while Cipla missed the estimates. Domestic growth remains the core strength, led by chronic therapies and branded prescriptions. Rabinder is joining us with more from the pharma space.
Well, yes, in terms of financial performance for the pharma companies in Q3 FY26, it was broadly an inline performance for the most of the pharma companies. A lot of companies beat expectation with a few misses here and there from the likes of Cipla and Piramal Pharma. And coming to the major themes we have seen this quarter, the most interesting and widespread theme is the run up towards the semaglutide patent expiry in the March, and multiple companies, almost all major players are preparing for the launches around March 2026, and we have Sun Pharma, Dr. Reddy, Lupin's, Mankind and many other gearing up for the launch in the first wave. And if we talk about Cipla, then Cipla has entered into a GLP-1 space via tirzepatide partnership with Eli Lilly, and Divi's Lab has not directly launched, but the company has exposure in this space, which is poised upstream as peptide fragment supplier, and this is turning out to be quite an exciting area to watch out for. That, and the second major theme we saw in this Q3 FY26 FY26 was the growth seen in Indian business. Many companies' domestic formulation segment performed well, with the likes of Mankind Pharma, Cipla clocking double-digit growth. Mankind Pharma reported a growth of 11.1%, while Cipla also reported a growth of 10% in Q3 FY26. And branded prescriptions and chronic therapy seems to be key drivers here for the companies. And in addition to that, we have also seen the pressure in the US business moderate impact from the dropping G-Rev limit sales to be bottoming out with product specific opportunities, bringing diversification. And we did see some companies faring extremely well in the US business, namely Torrent Pharma, Alchem Lab, Lupin, where Lupin US sales grew by 54% year-on-year basis in Q3 FY26. And however, volatility and uncertainty is expected to be continue in this region for the sector as a whole. So yes, overall it was some inline performance with GLP-1 excitement and an improvement in domestic formulation segment, where a few key trends with the Indian pharma players have witnessed in the Q3 FY26.
All right, so that's from the pharma space, but let's talk about the FMCGs now. Indian FMCG majors have delivered a mixed Q3, with staples showing a clear volume-led recovery. With a select few seeing margin expansions, management commentary points to stronger growth and improving profitability in FY27. Today is joining us with the detailed roundup of the FMCG space.
Well, yes, so it's been a very good quarter for FMCG companies. We're only talking about the staple companies over here. The staples have made a comeback this time around, and how in terms of revenue expansion, volume growth, as well as margin expansion for most of the listed FMCG staple companies. Q2, yes, was the marking of a recovery. Q3 has been even better. The GST cuts have panned out really well for the FMCG sector. Now that impact is behind them and the GST transition is completely done, let's take a closer look at a company-wise performance for HUL, the market leader. Mixed moves coming in, revenue growth of about 6%. Volume growth this time was exceptionally strong, a beat versus street estimates of 4%. On the flip side, the margins did see some contraction at 23%, which is still on the upper end of their guided range. For Nestle, it was a beat all round, very healthy quarter this time around for them. Yet again, 18.5% uptick on the revenue. Volume growth is estimated to be in double digits, so very strong growth over here, but they also saw some margin contraction this time around. For Britannia also, yet again a good quarter, revenue growth of 8.2%. The company doesn't give its volume growth, but we're estimating this metric to be really strong. And here the margin expansion has also taken place rather beautifully at 19.7% compared to 18.4%. So it's a margin bips expansion of more than 130 bips on a year-on-year basis, looking very healthy. Following that trend is also Tata Consumer, largely inline set of numbers, 15% revenue growth, 15% volume growth, very, very healthy numbers here too as well. And the expansion in terms of their margins has been to the tune of 140%. So very healthy moves here too. Godrej Consumer, beat versus estimates, good revenue and volume growth, margins expansions yet again to the tune of 140%. ITC, inline set of numbers coming in, about 6% revenue growth, and the 7% volume growth that we've seen in cigarettes this time around is also looking very healthy. Margin expansion to the tune of 50 bips here as well. For Dabur and Marico, both reported inline set of numbers, 3% volume growth for Dabur, but 8% volume growth for Marico, looking good. Dabur saw margin expansion, Marico saw margin contraction. So that's in a nutshell the roundup of some of the FMCG staple companies. Just taking us to some of the important highlights and the commentary in terms of guidance. HUL, they expect FY27 to be better than FY26, and the consolidated EBITDA margin will be in the guided range of 22-23%. For Nestle, this was their strongest volume growth in nearly 5 years, and all 4 product groups have done really well and delivered volume-led growth. For Britannia, they expect volume growth to be asymmetrical. They're not ruling out any inorganic opportunities. And mainly what they said and what stood out is that they're going to be adopting a startup mentality to combat competition. For Tata Consumer, the growth business grew at 30%. PAT growth should be higher than revenue growth going ahead is what they've said. And margin growth in Q4 should be between 14.5% to 15%. Coming very quickly to Godrej Consumer, they remain confident of achieving high single-digit consolidated revenue for FY26. Dabur, they say that Q3 was strong. Q4 is expected to be even stronger. They also expect high single-digit growth in Q4 and FY27. And lastly, when you talk about Marico, they say margins will improve next year. They aim to grow their foods business at 25% CAGR. They're also aiming to expand their digital-first portfolio. So outlook looks very good, and the numbers this time around have also been very healthy in terms of revenue expansion, volume growth, and of course for some of these majors, margin expansion as well.
All right, with that, it's time to wind down in this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in.